It is apparent that a lot of you out there have no idea how stocks work when they go through a split. Yesterday, I put out a short, just a 60-second video about the Amazon split and what you guys are thinking about it. Are you trading it? Are you not? Many times we'll see some sort of run up because people get excited on stock splits, and Amazon's obviously a big name. But you guys made some comments below, and I thought they were very interesting. And so I thought that I would share some of those and give my reaction to them, and then give you an idea of why you shouldn't be buying Amazon just because it's going through a split. But there is reasons why I think it's still a buy. So don't come after me too hard just yet. And I'm going to get to that at the end of the video. So make sure you're sticking around. But here's the first comment that I thought was very interesting. Actually, you know what? Let me go ahead and just show you what the stock's doing right now. Here's your stock. Here's Amazon. It's gone up roughly around 20% since the bottom about a week ago. And they announced the split had gone through, and or that is going to go through. It was voted upon. It got approved. The split's going to be going into effect, and it'll be showing in price on Monday. That'll be June the 6th. It'll actually go into effect June the 3rd. So June the 3rd will be the last day that you can buy Amazon at this current price, theoretically. And then it's gonna the split's gonna be shown in effect on Monday. That'll be June 6th. So I just thought there were some interesting comments about this. Here's the first one. Yes, it's more attractive. I hate putting 10K and only getting like 5 shares. Well, right. Yeah. I mean, I guess at the bottom it would be 5 shares. The more shares for my money, the better. It doesn't really matter though, as far as that comment's concerned. You buy $10,000 worth of Amazon. If it moves 5%, it moves 5%. Yeah, the dollar amount is going to look different on the price itself. The price of Amazon is going to look different. It's going to be around $120 ish, $130 ish per share by the time Monday rolls around, depending on where it closes at. But it doesn't matter if it moves 10%. It moves 10%. You're still spending $10,000 no matter what. You spend $10,000 on a stock that's $120 a share and it moves 10%. You're still going to get $1,000 profit. Same thing for Amazon right now. If it's at that price, you're still going to get that $1,000 profit. It's just a mind game at this point. And I think that is one of the biggest misconceptions that people get. Yeah, it feels better, I guess, to be able to buy more shares, but it truly doesn't matter. This is an interesting one. Won't options be easier for people to do, as in risky, as in not risky, right? No. First of all, options are super risky. I guess it would be easier for them to buy options because it's going to be cheaper. But Amazon's already one of the most liquid stocks when it comes to options buying. I believe Tesla is probably number 1. I would imagine Amazon, and I have to look this up, is probably at 2 or 3. So let's take a look at the next one. So, but no, it's not going to be, it's not less risky to buy options. You're better off buying shares if you're looking to mitigate your risk, unless you're buying something like Leaps, or you know how to actually manage your option strategy when it comes to covered calls and all that good stuff. So no, don't go that route just because you think options are less risky. That's definitely not the case. All right, so the next one here is going to be an interesting one. I actually responded to this one, and it says it gives a lot more people access to options. And to what I was saying about earlier, I said it already has one of the highest volumes in options in the trading market. And I mentioned that I think Tesla's number 1. I think that, in my opinion, yeah, it gives you a better access, I guess. But at the end of the day, every broker, just about every reputable broker, has the ability to buy fractions of shares. So it's essentially the same thing. If you're buying a fraction of Amazon, it's the same thing as buying Amazon after the split. You buy 1 share of Amazon post split, you're buying 1/20th of what Amazon is right now. It's the same thing. And I think that's what people just really have a hard time struggling with splits, especially if you're just not used to them. And so at the end of the day, it's window dressing, and I'll get into that a little bit later. But here's another comment that I thought was interesting. Now there's a lot more people be able to afford them, like me. They're just way too expensive right now, and people will be able to do the wheel strategy more easily, just referring to options. And again, it's not cheaper. It's just not. Fundamentally, the stock remains the same. You're still paying, that same. I'm looking at the 4P here. You're still paying 151 times next year's earnings on this, and that's all skewed because they reported a loss in the last quarter. But anyways, you're still paying a premium for Amazon regardless. That premium's not going to change just because the stock price looks different. It's just that there's more shares now to go around, and that you can actually buy it at 120 plus whatever it is it's going to be per share. And it just doesn't change anything. as far as the valuation of the company. The market cap stays the same, the PE stays the same, the multiple, all of that, price to sales, it's all going to stay the same. The only thing that changes is that the price, the window dressing, the sticker price. That's all it really changes. But it doesn't change the valuation at all. Last one here was please do a video. It's more psychology, in my opinion. And that's really what it comes down to at the end of the day. As I mentioned before, Amazon is being traded or is being traded right now at $2,400 a share. Monday, it's going to be looking at around $120 plus, and it's going to look better. But at the end of the day, it's not going to be any less expensive. The fundamentals of the company remain. Nothing changes as far as that's concerned. So why buy it? And I think that there's psychology behind this, that a lot of people are anticipating a ramp up because now retail is going to be able to start coming in and having more exposure to something like Amazon. We saw something similar, if you guys recall, about 18 months ago when we went through this with Apple and with Tesla and even Nvidia to a certain extent. Nvidia went wild after their after the split actually ended up happening as well. But that was on the heels of some really great earnings at that point. Obviously, things were different as far as the market's concerned then too. But I think, in my opinion, you look at Amazon and it also has come down considerably. And this is why I think it's a buy. It's not a buy because of the split. It's a buy because it's come down considerably. This was nearly $4,000 a share not that long ago. It was at 37.62 back in November, and it was at 37.73 back in July of last year. Those are some really strong numbers, and this has come down considerably. Yes, the growth has slowed somewhat, but it hasn't constituted a move down here to get down to pre-pandemic levels, and that's where Amazon is at this point. I think, in my opinion, the growth is still very strong. The AWS side of the business is ridiculous. It is the industry leader, and they take up the most market share in that space. I just think, in my opinion, that Amazon, and that goes for all stocks. You don't buy them because they're splitting. Yes, they look prettier that way, but it doesn't mean that the stock's going to change at all. Case in point, by the way, Apple, $28,000 a share is what it would be had they not split. You look at something like Tesla and come on, we're looking at 3,000 plus. So yes, it just looks better, but you're able to buy, I guess, fractions of Amazon now. But at the end of the day, you could have done that all this time anyway. So let me know what you guys think about this. Do you agree with me or you disagree with me? I mean, it's all factual information, but regardless, what's the psychology about it for you? Why do you see Amazon as a buy? Do you plan on buying this after earnings? Because also consider this. We looked at Apple and Tesla. They actually sank after those splits. And I think that a lot of it was because it got a little ahead of itself. People got really excited because of the split that was happening. And then once the split occurred, they really didn't go anywhere for 6 months thereabouts. So that's also something to consider as well. Again, nothing fundamentally changes with Amazon because of this split. I think that's something that's really important to get your head around. Let me know in the comments again, guys. And as always, I'll see you tomorrow at 3:45 p.m. Eastern time. I'm going to be reacting to CrowdStrike, Okta, a bunch of other stocks, Lululemon. So make sure you're tuned into that. It's going to be a great time. 3:45 p.m. Eastern time. Hit that notification bell, and I'll see you guys tomorrow.